Thank you, everyone, and welcome. It's a special edition of Business Incorporated. I am Barths. We thank you very much for joining us. We're live from Lagos, Nigeria's economic capital. I am Barths. Nigeria's central bank is now set to announce the decisions of the Monetary Policy Committee for the fourth time in 2017. Meantime, Ghana's central bank cut rates 200 basis points as the second largest economy in West Africa see inflation easing. Meantime, Saudi Arabia is calling on OPEC members to stick to limits and sees oil demand getting higher. Now, that's just how we're getting the show started for the next 30 minutes of the program. Let's start with the African market. Of course, a bit of a green shoot today across major markets on the African continent. 4 of them will track for you as always. We'll bring that up on your TV screen. Now you can see Nigeria after 1.86% on the NOT yesterday. We're about intraday, about 0.33% today. The South African GSC group is about 0.43%. That's slightly higher than the Nigerian Stock Exchange, 54,601 reading. The Egyptian market around 13,769 today, the second trading day of the week. In this week, for Egypt, that's the third trading day in the new week, about 0.1%. And on Monday, the Kenyan market was up about 0.5%, 156.11. Of course, the big story yesterday from Ghana's central bank cutting its benchmark interest rate by 150 or 200 basis points to 21.0% on Monday, citing a downward trend in consumer inflation and the potential for higher economic growth on increasing oil output. The cut, which economists had expected, reflected lower risks to inflation, helped by a slightly stable local currency. According to the central bank governor, barring any unanticipated shocks, the current stance of monetary policy and the expected stability in the exchange rate market should ensure price stability. Of course, today is the first day where the FOMC under Janet Yellen will be deciding interest rate for the U.S. market. Of course, expectations is that the U.S. will tinker with interest rate, not at this meeting, not the second one, and most likely the final meeting in September. Meantime, OPEC leader Saudi Arabia says the group will quickly address weak compliance with output cuts by some OPEC members and would monitor rising production from Nigeria and Libya, which have been exempted from the cutback.
Driving the sentiment. Reported compliance not matching export figures is one of those. Increased Libyan and Nigerian production is another. U.S. shale forecast is a third. And finally, the outlook past the March 2018 expiry date of our agreement. Although conformist with the production agreement remains strong at the aggregate level, some countries continue to lag, which is a concern we must address head on. In addition, exports have now become the key metric for financial markets, and we need to find a way to reconcile credible export data with production data and our monitoring mechanism. The other major issue that markets are focused on is the expansion of supplies from Nigeria and Libya, both of which have been exempted from our agreement. And of course, we remain supportive of our brothers and partners in both of those nations as they work on the recovery of their oil industries and their economies. The committee, however, should monitor the impact of such growth on global supply-demand balances.
Part of the decisions are the OPEC and non-OPEC monetary group in St. Petersburg on Monday. Let's return to Europe, where we're monitoring earnings and awaiting the start of the FOMC meeting starting from today. Ulrich Barths is back now on the wire. Ulrich, I'm sure you can hear me loud and clear. Let's test that out quickly, shall we?
Yes.
Okay,
I can hear you loud and clear, Bosun.
Thank you, and we can hear all the ambience from the Frankfurt Stock Exchange, the German DAX. The FOMC meeting starts today. What in particular is the market looking for in what Janet Yellen will likely say tomorrow when the meeting is concluded and we have a communique read to everyone?
I think the hopes are not very high that there will be a statement which leads people on in their assumption or in their knowledge of what the Fed will do until the end of the year. The Fed just finished with an interest rate hike in its last meeting in June, raising the key rate to a range of 1 to 1.25%. And the next rate, according to Janet Yellen, isn't expected until the end of the year. She indicated as much, at which point then a raise of the range to about 1.5% would be in order. What people are expecting, though, is that in September, at the next meeting, then the Fed will make remarks, also on a press conference, which tomorrow will not happen, but in September, a press conference on the reduction of the balance sheet of the Fed. And that's a very important piece of knowledge for the market. Janet Yellen has indicated that she wants to reduce, but hasn't offered any details, and people will be looking for details later. So tomorrow, probably it will be a meager yield, a meager reap of information from the Fed. Nonetheless, people are holding on to their hats until there's news from Washington.
Yes, a meager reap of, if anything, news is going to come in from the FOMC. But let's cut to Europe, where you are. On the earnings front, quite a number of earnings on the street as we speak, even on Wall Street. Among those companies that are reporting, how many of these earnings are you looking at as game-changing?
Yes, AkzoNobel, for example, it reported a drop in profits, and the share is going down. It just recently lost its two top people. Now the board chairman is resigning. Previously, already the CEO left. This under pressure from critical investors who were not pleased at all that AkzoNobel rejected a takeover offer, which a lot of investors probably thought was in order, but which management did not want. AkzoNobel now attributes the profit drop in the quarter of 6%, profit dropped 6%, to marine coatings. What is that? That's what you put on ships, painting to make them resilient against salt water and other aggressive agents, and also restructuring costs there. So that was the story of AkzoNobel, and of course also a story here is Alphabet, Google, with a record fine from Brussels, 2.4 billion, taking that into account in the quarterly balance sheet, and profits therefore at Alphabet tumbling by 28%, but still coming up with $3.5 billion. That's a lot of money still.
Yes, a lot of money, billions paid out to the authorities. But let's wrap it up on your business confidence numbers, unexpectedly high in July, hitting fresh highs for the third consecutive month. What's driving the business confidence in Germany?
I think the company's business is just booming, and it's euphoria in the top executive levels, says the president of the IFO Institute, which polls the 7,000 companies in this IFO Business Climate Index. And he says that the German economy is going full steam. Other economists agree, and I think everyone is surprised because most economists expected after the last month's record high that it would settle down just a bit. But an economist that works for a bank here in Frankfurt said it's just strong investment, and both strong investment on the business side and strong industry, remarkably strong industry in Germany, and strong consumption. And they all work together to create this very, very positive business climate here in Germany.
Yes, Ulrich, we thank you very much. But just hold on a second. Take a look at the table here. We're going to give you a long shot of it. We're all ready for Nigeria's central bank interest rate decision today. And you can see some of my team members here who are panelists going to discuss interest rate decision today by the central bank. What do you got to say?
Hello to everyone from Frankfurt.
Danke. Okay. Danke schön. That's all from all of us here. Thank you very much.